I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, I'm hearing two opinions on gold right now. It's going to go higher because people expect the stock market to go down. And others are saying with a rising U.S. dollar, it's going to go down. What do you think's happening with it, especially when it comes to cycles?
Well, I think that, as in so many cases, both sides could be right for certain periods of time. I do think that you're seeing certainly some pressure on gold right now as the dollar has been rebounding. But the thing to me where the dollar's concerned is even this most recent rally, which has broken out of its 2-month trading range, it remains neutral to down on the year and on certain weekly trend indicators that I use. And each of those patterns has been telling me to look for a secondary peak here in the coming weeks. So obviously gold has been under pressure because of a bouncing dollar, but I don't think that that is going to continue for that much longer. And so that could then suddenly feed into the other scenario you described, which is also a question of timing. Yes, if the stock market sees a pretty sharp break, you'll probably see money move into gold, at least on a temporary basis. And that pretty much reinforces what I've been saying for the last year or two with gold and with a number of these markets, that you see some very quick, sharp moves, and especially when there's an intermarket correlation at work, like if the stocks are suddenly dropping sharply, you see gold rebound. But as soon as that, whatever the lead market is, starts to quiet down and go back into a bit more controlled trading range and activity, then the correlation just kind of dries up and each market starts to pay attention to its own fundamentals and its own driving forces. And you see a lot of vacillation in and out of those correlations. So, you know, it may sound like I'm not really giving a clear conclusion on that, but I think it is both, and I think that that's the type of market we've been in for a couple of years here, particularly in gold, which since its bottom in late 2015 has been in an extended bottoming phase, but has not broken out to the upside. And that's what gold's going to need to really start moving more like a trend move. And I don't think you're going to see that until gold convincingly closes above 1375.
What do you think it will take? Some major geopolitical thing to do that?
Well, one of the things that I've been discussing a little more passively throughout last year, but pointing to this year as a possible time for this to happen, is somewhat of a parallel to 1987 with interest rates and the stock market and gold and the dollar, and in particular the idea that back in 86 and 87, bonds had peaked in early 86 and they were steadily declining for the next 18 months on slowly rising interest rates, and that was a response to, economic activity looking robust. And so for, the first 3 to 6 months of that scenario, good economic activity, interest rates going higher, all that's good for the stock market. So the stock market from beginning of 86 just started taking off. And that whole scenario for 6 to 9 months and 9 to 12 months looked great. Okay, interest rates are still rising. That's okay. It's economic activity. That's good for stocks. Stocks go up. And it just kept going and going for 18 months. And then, like flipping a switch on or off, that whole correlation just shifted 180 degrees, almost on a dime. And you saw the stock market peak in late August. Bonds were still heading down. And then all of a sudden, on October 16th and 19th, the stock market just kind of gives up the ghost, and it just falls out of bed. And at that time, basically, if you look at the charts, and the lowest daily close in bonds and stocks was on the same day. So you had bonds heading lower for 18 months, stocks heading higher for 18 months, and yet they both set multi-year lows on the same day, October 19th. And that's how these correlations and these anomalies in the market work so often, is you get one market bucking the pressures of a correlated market and looking at one side of the equation, in that case stocks looking at the economic activity as being good, and then all of a sudden you crossed the Rubicon. You just hit that inflection point, that tipping point, where all of a sudden it went from higher interest rates being good to higher interest rates being a huge threat, and boom, stock market gave up 18 months worth of gains in a matter of a few weeks. And you're not to that degree, but you're seeing similar patterns in the markets now, and you've seen bonds now heading lower for a little over a year and a half, and most recently bonds and notes have returned back to their intra-year lows and starting to spike below them, and that's kind of what you saw back in 87, where you had set a low and then things stabilized, and then bonds returned or extended their decline, broke those lows, and that's kind of like that trigger point where all of a sudden it's now perceived as being extreme. Things have gone too far, the pendulum has swung too much in one direction, and the markets react violently and quickly. And it wouldn't surprise me to be something like that triggers a whole kind of recalibration of the market here. You could see some additional positive reports over the next couple weeks, and there's a lot of key ones lining up in the next 10 to 14 days, from GDP to then employment and personal consumption in there, and several others that really could kind of affirm what's already been going on. But with bonds and notes at their lows, it could drive them lower, and suddenly now you're at multi-year lows. The market starts to get spooked. Stock market's already turned and has been in what appears to be a topping phase, and so you could see stocks break below those February lows, and all of a sudden you just get a sharp, violent move that might only take a week or less. And then, just like we've seen in recent years, it's all over within a few days or a week. But that too could reassess the relationship between those markets, the dollar, gold, and so that's one thing that I think could be a trigger. But as you point out, you could also have geopolitical things. I think that a key thing that no one's been talking much about is this looming May deadline or time frame for the U.S. moving its embassy in Israel, and how the rest of the Middle East will react to that. So there's, and of course, all you've got with Russia, with China, with the current administration, there's so many possibilities there that it would be almost foolhardy to get tunnel visioned on one possible one when it's so easy for something to come out of left field and shock the markets, even if it is just a temporary basis.
We'll have more with Eric Hadik right after the break.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Welcome back. We're chatting with Eric Hadik. Eric, what do your charts tell us about the future of crude?
Most of my intermediate work has been telling me to look for a second peak here in late April. We saw that initial peak in late January, and I thought that we would see a succession of highs in 2018 with a final peak most likely in the third quarter of this year. But we're coming right into the time frame when I think we're going to see another 2 to 4 week, maybe a 1 to 2 month peak set right around the $70 level in crude. Both unleaded gas and heating oil are getting close to multi-year upside targets and resistance zones, both around the 220 level. And so you've got price and timing coming together here. And so I think within the next week or two, and possibly within the next day or two, we could see a turn in the oil market. And that could be one of those things too. You know, when we're talking about the possible scenario of stock market having an abrupt move down at some point on the not too distant horizon, that often has a quick, abrupt deflationary impact on a lot of commodities, even if it's very short-lived. So even that would play into a scenario like that, although there could be a lot of other reasons that might drive oil back down on a near-term basis.
Is it a factor that Saudi Arabia might want to keep prices up because they're near the IPO for Aramco?
Well, I think it's so many things like that too are by the expectation, sell the news that it's factored into the markets. The markets have been driven up by that and related fundamentals. And so a peak is usually seen when the news is still bullish. And a peak doesn't mean that you have oil falling out of bed all of a sudden in the ensuing weeks. It just means that it pulls back from that high and could consolidate in a trading range up there, maybe between 65 and 69 for a few weeks. So it doesn't have to be an all-out bearish implication, but that news like that already being factored into the market is usually the type of thing you see near a top when no additional bullish fundamental comes to light. All the buyers are already in, so what's left to do?
We'll have more with Eric Hadik right after this.
Hadik Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Hadik's management has extensive potash exploration and development experience in Thailand. Hadik will have marketing advantage compared to Western producers. Drill program commences this spring. Hadik trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, hadikventures.com.
Don't miss out. Stay informed Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Eric Hadik. Eric, in the past, you've talked about war cycles and, of course, how that can impact the economy. Where are we in those cycles, and what do you think is a danger point?
I'm still looking out at the specific year of 2021, and that's from very long-term cycles. But I think you're going to see steady escalation of tensions from 2019 to 2021 based on a lot of these longer-term cycles and based on, obviously, where you see things going already. That whole idea of markets and events casting their shadows before, as you look at the way geopolitically things are steadily lining up, and even most recently when you see the events with China and Taiwan where things are escalating more there, I think that you keep seeing the ducks getting in a row, but I don't think we're quite there yet.
When you take a look at these cycles, of course, you have some historical basis for it, don't you?
Absolutely, and that's what I try to stress too. Cycles are not just numbers or dates or eras. That is really just the identification of when, but it's also kind of building on that idea that those that don't learn the lessons of history are doomed to repeat them, and human civilization cycles that just go through recurring patterns as one generation does fade, the lessons of the past are lost, and a new generation starts to think differently, and yet really, as the author of Ecclesiastes said, the more things change, the more they stay the same. The thing that has been is that which already was. And so that pattern just keeps going on and on. Now, each time it manifests itself in different ways. I look at life and these cycles and civilization as more of a spiral, not a circle, to where it does circle back around but doesn't meet at the exact same point. It keeps progressing forward. And so there's a lot that goes into that, and a study of human psychology and of what moves masses. So it's a very comprehensive study, even though the specific time frames are often the topic that I'm speaking of.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com, Inside spelled INSIIDE. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.